Look, two or three things quickly, Murray. The first is we have to recognise that New Zealand faces relatively high natural hazard risk. As Richard has said, we have a lot of risks from natural hazards, and that has driven up the price of insurance. So by international standards, certainly by comparison with Europe, residential property insurance, for example, in New Zealand is very expensive. In France, the insurance coverage, the insurance cost might be about a third of what it is on average compared with New Zealand. And going back to Chris's point about the substantial size of the NHC levy that people pay, which is capped at $480 in countries like Spain and France. The average amount that people are paying is around $60, $70 New Zealand. So vastly less. And that reflects this difference in natural hazard risk. So key point about this when it comes to subsidies is, given the very high cost of insurance in New Zealand, there is arguably a stronger case on equity grounds for having some kind of subsidy regime. And the question then becomes, among other things, do we go for kind of implicit subsidies through community-based premiums as opposed to risk-based premiums? Or do we have some kind of explicit subsidies, as we do, for example, in many other policy areas, where poorer people receive some additional support or they're not required to pay as much? Or do we have some mix? And I'm not going to answer that question now. I'm not sure what the best answer is. The problem is, whatever we do, there are potential downsides and potential costs.